Pakistan is a country of immense promise and profound paradoxes. With a young, dynamic population and a location that connects South, Central, and West Asia, its potential seems boundless. Yet beneath this promise lies a troubling reality: an economy teetering on the edge, gripped by recurring crises. Inflation has skyrocketed, the national debt has spiraled, and the Pakistani rupee continues to lose ground against the dollar. Basic staples like flour have become unaffordable luxuries for many, with prices once soaring to 800 Pakistani rupees per kilogram. While inflation has eased slightly in 2024, the financial strain on ordinary citizens remains overwhelming. But Pakistan's economic woes didn't emerge overnight. They are the result of decades of choices and challenges. Decisions at independence, political instability, dependence on foreign aid, and a failure to diversify its economy. To delve deeper into Pakistan's economic journey and understand the forces shaping its struggles, I sat down with Uzair Younus, host of the popular podcast Pakistonomy and a keen observer of Pakistan's political economy. To truly understand Pakistan's journey, we must go back to 1947. What were the unique challenges that Pakistan faced at birth that influenced its choices?
I mean, look, Ankur, I think the unique challenges were really political in nature and institutional in nature. Unlike India, or India at independence or partition of the subcontinent already had an ongoing constituent assembly, Pakistan did not have that process. So, number one, the country and its leaders had to kickstart that process and figure out, okay, what is this country going to be about from a rule of law, constitutional order point of view? And in that, two key events sort of happened that sort of put the country off track. Number one, first of all, Muhammad Ali Jinnah was unwell, and very soon after independence and birth, passed away in Ziyarat. And then Liaquat Ali Khan, his confidant and the prime minister of the country, was assassinated. But even when he was alive, these questions about how the country should be governed, what the role of Islam is going to be, etc., were debated in the Constituent Assembly. So that was the number one focus about how do we bring this country together. The second structural issue for the country, obviously, was the fact that at birth, the core industry or the core revenue generating parts of United India pre 1947 were not with what was then Pakistan, right? So on the east, you had Calcutta cut off from what was East Pakistan, and then on the west, you had sort of Punjab cut off and at birth as well. And then Karachi obviously was a much smaller town at that point in time. So all of that meant that Pakistan, although it inherited sort of the frontier military of the British Raj, looking at the northwestern frontier province all the way into Afghanistan, for example, it did not have the resources and the industry and the institutional framework to govern this country. And I think that's really where things became challenging for the country's ruling elite. And then you saw a bureaucratic takeover followed by a martial law, and Ayub Khan comes into power. So I think those were the key challenges. If you sort of look at 47 through the martial law and Ayub's rise, the country and the elders at that time just did not know how to govern this country in an effective way.
Did Pakistan make mistakes on how it allocated resources after independence? What could it have done differently?
I think they did a pretty decent job in terms of getting the country up and running at that point in time, given everything that had happened. I didn't even mention the economic impact of the refugees, right? For example, I read the Constituent Assembly debates almost a decade ago as part of my education. And one thing that stood out to me in that was there was a debate at that time about how lavish weddings were in Karachi. And the debate was that we have so many refugees coming in places like Lahore and Karachi who don't have food to eat. And here are the well-heeled old class of Karachi's business leaders having these lavish weddings. So maybe they shouldn't have that, right? That was the pressure. So to get the country going at that point in time, I think they did a pretty decent job. I think the one big mistake that was made at that time was that there was this issue around who is a good patriotic Pakistani. And I think that exists to this day in the country, and it becomes a challenge for those who have a different perspective in Pakistan to be labeled as traitors or unpatriotic or anti-national voices. So, for example, you had Bacha Khan facing that issue. You had some of the minority members of the old Congress party that had decided at that time to remain in Karachi facing that problem. Most people forget, for example, that the elite class of Karachi at that time were Parsis and Hindus, right? And so you had that debate play out. So those were the initial mistakes. And then on the East Pakistan side, I think over the first decade and a half or so of the country's existence, the way in which resources from East Pakistan, particularly jute exports, were used to finance development in West Pakistan, I think now that we look back at history, it seems as a clear mistake to make. And that, of course, led to 1971, and we can talk a bit more about that as well.
There exists a myth in some Pakistani circles that in the 1960s, South Korea tried to learn from Pakistan and emulated the Pakistan model to become the economic superpower that it is now. We know that this is not true. However, both Pakistan and South Korea had comparable economic situation in the 1960s in terms of per capita income, but their trajectories diverged significantly. Why do you think this divergence happened?
So I think the South Korean and Pakistan example, I think, overlaps in the sense that both were countries where the United States had an early interest in sort of seeing development of a certain type happen. And obviously, in both South Korea and in Pakistan, the US encouraged a certain level of economic development. You had the Harvard Group in Pakistan doing a lot of economic development, a lot of aid and support coming in from the US early on at that point in time when Pakistan joined CETO and CENTO. I think what fell apart in Pakistan were two key things that happened. One was that Ayub's dictatorship and its lack of popularity towards the end, culminating sort of in the 1965 war with India, led to this view that everything Ayub had done was wrong. And there were student protests, union protests, etc., and all of that culminated in the rise of Zulfikar Ali Bhutto at that point in time, running up to 1971, and this broad idea that somehow Islamic socialism, quote unquote, as it was being described, was a better path forward for the country. So I think that was one key area where there was this ideological difference emerging. And of course, we cannot ignore the emergence of this ideological difference with the fact that in the 60s and the 70s, the Soviet Union was looking like a very solid alternative to the Western American led world order and economic model that was being developed. So that was one. I think the second one where Pakistan fell apart also was the fact that, unlike India, for example, it did not go through a robust enough process of land reforms that should have happened early on in the country's history. And what that meant was that political power remained in the hands of a select few elites in the country, both the business class out of Karachi, but also the landowning class in Punjab and Sindh in particular. And that then led to a lot of problematic decisions being made where rent seeking became the norm, not the exception. And then, of course, the reversal that then happened with Zulfikar Ali Bhutto coming to power was not evolution of that system, but a complete overthrow of that system through nationalization. So I think that idea that you can just flip a switch and go completely the other way was the key mistake versus, for example, South Korea. You kind of saw a slow and steady evolution of the system. The chaebols emerged. Yes, there was corruption in the chaebols. There was dictatorship. There were protests against the dictatorship. But the broad economic sort of system that existed continued to evolve in the right way when it faced shocks in the Korean example. And that just did not happen in the Pakistani example. And then, of course, 1971 being a major conflict where half the country went away. What I often tell Pakistanis, right, is that the way to think about it is that Pakistan today is the only country in the world where the majority of the population left and you still kept the name of the country. And they did not take the name, right? They became Bangladesh. And I think if you frame it according to that, the 1971 conflict, in my mind at least, emerges as a much more significant event than most Pakistanis would like to believe it to be.
In your view, could Pakistan replicate South Korea's success by adopting similar strategies today?
I think South Korea's emergence or even China's emergence in the 90s and onwards, right? You mentioned the South Korean GDP per capita. Up until 1990, Pakistan had a higher GDP per capita than China, for example. So Can that be replicated? I think those were unique moments in history where globalization, free trade was sort of being seen as a norm. The United States, because it had to compete initially with the Soviet Union, was willing to sort of give away certain benefits or access to its own economy for partners. That no longer is the case. We already are hearing in the emerging Trump era now, right? The return of trade wars and tariffs. And many people, in my view, are mistaken about this fact that the Trump administration will be okay with friendshoring. I don't think they want onshoring of jobs. They want industry to come back into the United States. So at a time when we are in this system where global open trade is becoming less of a openness on the United States or the Western side, I don't think it's going to be that easy, but there are parts of the Korean and even the Chinese model that the Pakistanis can replicate and learn from. I often tell them the first thing to do is you have to have a coastal strategy. You got to empower your coastal cities, in particular places like Karachi, to be real hubs of economic exports, and then you can build out from there. So that's number one. I think the second one, of course, is that if you look at South Korea, or even for that matter, India and China in particular, you got to have investments in human capital. And only then can you begin to climb up that ladder, right? So I think there are certain elements of that strategy that can be leveraged and copied from Korea. But wholesale, are you going to have this specific strategic relationship with the United States that then accrues benefits to you in ways that the Koreans were able to take advantage of, and later the Chinese through WTO? I don't think that's going to happen anytime soon for any country, including Pakistan, at this point in time.
How has political instability and the military's role in governance affected Pakistan's long term economic planning?
That's the heart of the issue. I think it's this constant political drama, particularly since the end of the Musharraf dictatorship, that has plagued Pakistan, that has forced policymakers to just kick the can down the road on very difficult, decisions that have to be made. For example, I was very young when Musharraf was the dictator and was trying to implement a value-added tax and bring in the traders into the tax net into the country. And he failed because they went on strike, and even a dictator sort of said, okay, this is too much of a problem for me to deal with. Since then, repeated governments in Pakistan have tried to implement this broader tax and get the retailers and wholesalers into the tax net, and every time they just can't get their hands around it, right? The most famous recent incident was Miftah Ismail, the finance minister, making this attempt of a token tax, and Mariam Sharif tweeting, Miftah bhai, please look into this. And then the tax was taken away a couple of years ago. But why does that happen? It happens because political actors know that given the dynamics in Islamabad and Rawalpindi, they only have so much political space to make tough choices. And if they are going to be backstabbed by somebody who's playing their own games against their regime, or they don't have legitimacy in the case of this current government, well, how much do you want to push the street into aligning with those other actors or creating that opening, right? So that's number one. But I think that also in the main debate is, to be honest, overstated a bit in terms of what can and cannot be done in Pakistan. I think a lot of this has to also do with the fact that Pakistani policymakers just don't believe in common sense economic reform. They have cuckoo ideas that they just want to keep implementing time and time again. And I think that is also part of the problem. So it's both political instability, but also this lack of evolution within Pakistani thinkers in terms of how economics is run in a modern country, a country as large as Pakistan, and what the dangers are of following really poor economic choices time and time again.
Is there a need to separate political and military influence from economic policy making in Pakistan?
So I think there is a need in the long term to go about doing that, structurally speaking. So for example, if you have a military-owned business, let's say in the infrastructure space, given the political dynamics in the country, you will be very, very challenged as a private sector individual to compete with that business in the infrastructure space because of the linkages the military and its retired officers have into the bureaucracy, right? I'm not even going into all of the bad ways in which this plays out. I'm just talking about access, right? You have to implement infrastructure, you have access, you were an officer, you can run around and get through the ministries in ways that, I, Uzair Younus, as an entrepreneur wanting to be in that space, just cannot. It's always going to be a long slog for me, right? So there is that need. I think the bigger need right now, as we've seen in the last couple of years, is through the emergence of the SIFC, a more formal role for the military emerge. And I think that is what has to be dealt with immediately, because what it is leading to is it's causing a parallel system of decision making and oversight within the bureaucracy and the system that is not good. And it's not good in the sense that everyone now looks towards the SIFC to get the ball rolling on certain things, and you have to go to SIFC as a clearinghouse to get files moving, decisions made, etc. And I think if you're going to force military officers to be that clearinghouse, it's just not a good influence on the institution over the long term. And it just corrodes decision making within the formal bureaucratic system, which is supposed to be made more efficient over time. So I think that's what has to happen. And I think finally, I would say that, over the since this crisis, over the last few years, more and more military institutions have tried to build their own economic thinking think tanks or departments, etc., to get an understanding of what is going on in the economy. I necessarily don't see it as a bad thing if they want to understand economics better. But the problem that I have had is that the kind of things that they then get exposed to, or the kind of views that they get input from, are the very ones that have landed Pakistan in this mess, right? So, for example, this whole thing about renegotiating with IPPs, power producers, by coercion, essentially. Let's be very frank about that. It doesn't yield a lot of savings on the overall power sector dynamics, but it has become such a big thing that, from my conversations, GHQ has an interest and has a point of view on this, that it's eroding investor confidence. So at a time when you're trying to privatize the PIA, you are penalizing the same investors who would in the power sector who probably have the capital to buy the PIA. And that's where you run into trouble. And I think if you want to understand the economy and how economics works, fine, go ahead at it, but at least listen to people who kind of have a better understanding of things, as opposed to cuckoo views that says negotiate by force with power sector producers.
Are IMF bailouts a lifeline for Pakistan, or do they perpetuate a cycle of dependency?
So they're both. They are a lifeline in the sense that when the country is on the brink of default, and standby arrangement of 1 year and then a 3-year EFF is critical. Otherwise, you run into default, and those are scenarios that are very, very scary for a country like Pakistan, almost like Sri Lanka on steroids, if you want to imagine that, right? And so the IMF provides that support to Pakistan that allows the country to at least go towards macroeconomic stability. What successive IMF programs have done, and that has been a challenge for Pakistani policymakers over the last 2 to 3 years, is that it has created this moral hazard problem where the Pakistanis know that there will be a lifeline at the end of the day. And once that lifeline is provided, the IMF will nod and wink and say you are on track when essentially you aren't, and keep giving you those flows for various reasons. This happens with Argentina too, for example. But in the last couple of instances, the IMF has really put its foot down, and it's been a learning experience for Pakistani policymakers to realize that the war on terror era exemptions that they were used to getting are no longer on the table, for example, right? And that's been difficult for them. But writ large, it's not just the IMF, writ large, Pakistan has a geopolitical rent seeking problem. And the era of geopolitical rents, at least over the last 2 to 3 years, when it ended, has caused a lot of trouble economically in the domestic system. And the Pakistanis have had to wake up to that new reality, that those rents are just no longer there in the way they were in the recent past. Now, some would in that I talk to say, well, conflicts that are now emerging perhaps provide another emerging geopolitical rent lifeline. I still don't see that happening, but it is that rent-seeking problem essentially globally that has allowed Pakistani elites to kick the can down the road when it comes to meaningful reforms in the country.
How can Pakistan reduce its dependence on foreign loans?
Well, so there are two core ways in which you can do solve that dependence, right? I think in the conversation, you know this better than most people, Ankur. So let me go a bit wonky on you on this one, right? You have a situation where fiscal deficits lead to an emerging external sector need. A lot of people in the mainstream conversation forget the connection between fiscal deficits and external sector needs as well. And then when you have those needs, there are a few ways to fill that need up, right? You can borrow money through the bond market. You can have FDI flows that are coming in, and then you can have assistance and invest aid coming in, right? Those are three big buckets you can tap into. Now, if Pakistan wants to continue to have a certain level of fiscal deficit, which as a developing country it can and it needs to, it has to then find a way to attract foreign direct investment as opposed to loans to reduce this dependency that you referred to on the foreign loan side, number one. Number two, if you are still borrowing, but you are on an economic journey that is about reform, about increasing the size of the market economy, about deregularization, then of course the flows make sense, especially if those flows are being used in ways that increase your export capacity, right? Because that then gives you access to 3, 4 years down the pipe, dollar earnings that reduce that loan dependency or allow you to pay back that loan. It's that challenge that the Pakistani policy elite have not grappled with in an effective way. So when you run perpetual fiscal deficits and there is a global reach for yield happening, yes, you can borrow your way out of that problem, and like is what happened post 2008 all the way up to, like, let's say pre-pandemic global economy, right? And then of course you had the Chinese investing in the same way. Now the mistake the Pakistani policymakers did was they binged on that debt, but they did not use that debt in ways that increase their ability to earn more export revenue. So you borrowed in dollars, gave guaranteed rates of return in dollars at a time when there was a power crisis in the country. Okay, makes sense that you did that. I understand and appreciate the need of the political system to do that. But at that same time, you should have made policy choices that allowed you to use that power to export more down the pipe. Now, when you did not do that, now you are caught with a problem, right? That you have debt owed in dollars and returns owed in dollars, where you don't have access to those dollars because global interest rates went up, your economy went belly up, and nobody wants to lend you money, and therefore you go to the IMF. So my view is that you got to look at both the fiscal deficit side of that problem and solve that through a more equitable tax structure. We know the solutions for that. You have to bring the retailers into the tax net. You have to have a decent or half decent tax on agricultural income for large landowners. You have to have a half decent, if not decent, tax on property. For example, the fact that I always give to people is that the city of Pune in India raises more in annual property taxes than the entire province of Sindh. This cannot be sustained. And this is also skewing incentives because lack of taxes on real estate, unproductive real estate incentivizes savings to flow into that sector, which is unproductive. You actually need capital to flow into productive sectors of the economy. So you got to look at the fiscal side of that equation and then do the market type reforms that give confidence to international investors who may want to lend you money or may want to invest in your economy. But either which way, you got to have a system that allows that access to capital to flow into export promoting sectors of the economy, not domestic consumption. And I think if you begin to make that journey, then a lot of the external debt dependency problem automatically goes away in the near term because of those increased flows that are coming on the back of reforms. And then if you target those reforms towards export earnings, then in the medium term, you begin to earn those export earnings to be able to sustain yourself and pay back that debt and also have access to more dollar reserves in the long term.
In the last decade, Pakistan has come to depend more on China for investments as well. Has Pakistan's reliance on China for CPEC investments been a net positive or a growing liability?
It was a net positive in the sense that the infrastructure investments Pakistan needed, particularly in the power sector and in logistics connectivity through the highway system that has been built, was important at that time. I mean, I think now that we are far away from that crisis of the power sector, people forget that Pakistani cities were having 16-hour rolling blackouts at that point in time. No country can survive that, right? So the Chinese did give access to capital and did set up power plants that allowed Pakistan to solve for that problem. And then they invested in a highway network that is very, very good at moving goods across the country. And that's a net positive. I think There's this view, including on the opposition side, when these roads and highways were being built under the Sharif era, that these are useless roads. And my point to people would be, well, just go live in a village and you will understand that 35-minute painful drive to get your kid to school is not really a great experience to have, right? So that road matters for that ordinary citizen. And if that road is being built, then we should celebrate that, because all sorts of positive things happen as a result of that road connectivity. What has happened, unfortunately, is that a lot of the choices Pakistan made in terms of how to deploy that Chinese capital were made through wishful thinking. For example, there is this famous op-ed. I think at that point in time, the gentleman was some level of influential advisor on the CPEC side in the Planning Commission. And he had this audacious figure about what percentage of global trade would flow through Gwadar as part of Chinese investments. And therefore, the investments or the loans that were being borrowed would be payable at that point in time. Well, that was a ridiculous figure to have, because it was like a lot higher than what anybody with a half decent sense of how global trade operates would have come up with that figure, right? But if you have those assumptions being built, then you are always going to be left holding the bag. So when people in the West, particularly in DC, say, well, Pakistan's in a China debt trap problem, I'm like, Pakistan has had an external debt trap problem since independence. It's not the first time this has happened in the country's history. But it's also not a debt trap, because a debt trap then means that you, as the domestic actor, had no agency in this. But Pakistan did have agency. Pakistani policymakers could have thought a lot harder about how to deploy that capital. And clearly, opening up a new airport in Gwadar on borrowed money, where there is no access to clean water in that city for ordinary citizens, is clearly not the right strategy, right? So you could have done things a lot differently as a domestic actor about thinking through what it is that you want to enable through this borrowing. But now, increasingly, that you've done that and now you're out of ideas, obviously this is becoming an increasing a liability, because the Chinese are unhappy, their investors are unhappy, there's a growing insecurity problem, and nobody likes being owed money to, right? And that's what's souring the relationship to some extent. Even now, from what I talk to people in Islamabad, the Chinese are open to continuing to support Pakistan's economy. It's actually the insecurity of their people in the country that's become the bigger problem. And then, of course, my view to Pakistanis is that if you reform the right way, it doesn't matter whether the capital is Chinese, Saudi, Emirati, or American, or German. Capital flows to countries that are reforming, agnostic of where it is coming from. It doesn't have a nationality of its own. This is how global capital flows work. And so if you get your journey right, you will have access to all sorts of capital, and you don't have to then think about, do I get money from X country or Y country, because your reform journey will allow capital to flow into your shores in any case.
How do you think Pakistan can salvage sustainable benefits from these Chinese investments?
So I think what it has to do now is look at, okay, what have we borrowed and gotten investments in from the Chinese, right? And obviously, the part of that are sovereign agreements that you have, for example, in the power sector side. So forcibly renegotiating that, I think, would be folly. Pakistan did that with domestic producers, as some domestic producers trying to do it with more. I think that's a mistake. It would be an even bigger mistake to force it with international investors. Already, there have been some reports that one of the IPPs that was renegotiated with had some stakes with the Germans in it as well, and the Germans are unhappy about that forced renegotiation. So don't go down that route. I think what you have to do is look at the power sector holistically, for example, and privatize it, decentralize it, and allow distribution companies at the local level to have their own solutions to problems that exist in the system. Number one. That also includes doing away with this uniform tariff and one buyer model that Pakistan has. So that's critical. I think that's a core component of the Chinese investments that happen through CPEC, and you got to make those viable through very difficult, politically speaking, very difficult reforms on the power sector side. I think the second thing Pakistan has to do is look at, okay, we are a country that is struggling to export our way out of this. Well, how do we export, right? In the geographic map that is Pakistan, the relationship with India is not going anywhere anytime soon. Central Asia is a decent market, but not a huge market for you to access. The core market Pakistan accesses for its exports is via the seas. Okay, so if we're accessing the markets via the seas, we have one major port in Karachi. That's basically the core mechanism through which we access those shores of export earnings. How do we make that efficient, right? How do we make our coastal belt efficient is going to be very, very important, because it's far easier to move people down south and do the kind of basic assembly work, manufacturing work that is required at the early stages of an export economy, versus moving goods up into the north, doing value addition and bringing them back south. That's just, you're going to lose out on the arbitrage just by logistics costs alone. So you got to have a almost like a marine strategy or a coastal strategy to be able to take advantage of that. And because Pakistan is a net importer of energy in any case, you can have the energy also coming into your shores via that. So it's not a lot of transportation that has to happen. The only thing is you got to settle more people onto your shores and have cities like Karachi work better, for example. And I think the third thing that has to happen is basically Pakistani policymakers following prudent economic models for the next 3, 4, 5 years. One thing that I tell people now is that now that the crisis is easing, inflation is coming down, interest rates will start coming down. Good things happen to countries like Pakistan or India or China that are just young, full of young people, when inflation is low and the cost of capital is low. Just generally speaking, if you don't muck around too much as a policymaker to do things like, I want to amp up growth by spending more or XYZ, just maintaining a low enough interest rate environment, by extension having low inflation and keeping the cost of food cheap, generally speaking, good things will happen in the medium term to that economy. So my view always is, even if you don't want to do the tough politically costly reforms that Pakistan's economy needs, if you want to go slow with that, okay, go ahead with that, so long as you don't implement harebrained ideas on the Islamabad side on economic policy management. Just have a clear goal. I want to keep inflation low, in particular food inflation low, and I want to use that as a mechanism to keep the cost of capital low in my economy. And so long as that happens, I think generally speaking, Pakistan's economy will be in a pretty decent shape if that is sustained.
What are the key reforms that Pakistan needs to implement to break out of its economic struggles?
It needs power sector reforms. It needs tax reforms, particularly more equitable tax base. And it needs some level of governance reforms that decentralize power and devolve power down to the municipality level. And I think, Ankur, like this is where the Indian example is a very good sort of analog to look at, right? So India has a lot more states, and therefore competitive dynamics within states are helpful to the country. In terms of a Gujarat is different than a Maharashtra, is different than an Andhra, is different than an Uttar Pradesh, but those state governments follow their own choices and in a bid to do better, right? And they make their certain decisions. Pakistan has only 4 provinces, so by definition, that competition is limited, because there are two core economic provinces in the country, that's Sindh and Punjab in any case. They're large, there are a lot of people, but you don't have a lot of competition when it's just two main actors, right? So if you devolve power down to the city level, to the municipal level, all of a sudden you can have much more competition emerge in terms of how to do governance better, how to build infrastructure better, how to have a better energy policy, et cetera, et cetera. So if you reform the power sector by decentralizing distribution companies, having a multi-buyer, multi-seller model, that's number one on the power sector side. Without cheap energy, no country can industrialize. So that's number one. Then you decentralize governance and devolve power. So tax policy conversations, how to invest in schools and basic healthcare, et cetera, devolves down. There's more competition. And then finally, you gotta have some level of investment made and out of the box thinking done on how to make access to capital less scarce in Pakistan. Access to capital has become such a problem for Pakistani businesses and citizens, particularly those close to the bottom of the pyramid on the personal finance side, and small businesses on the business side, that it's just not sustainable, right? When you have a sovereign that is running these fiscal deficits and banks getting used to the fact that they can have risk-free returns on this benefit, on this sovereign that is continuously borrowing, that's not a good system to have as a financial system for any economy. So you got to have a mechanism that not only increases the size of the deposit base in the banking system, but then direct it in ways that allows access to finance to be cheaper, more efficient, for small entrepreneurs, for new investors, for Pakistani ordinary citizens who want to save money and get access to returns, right? And so if you solve for that, You have sort of the makings of some level of capital that can be capital pools that can be targeted towards export-oriented growth. For example, one thing I often brainstorm about with my friends and colleagues in Pakistan is, well, we have a lot of capital tied up in unproductive real estate. So one solution is raise the real estate tax level to disincentivize that investment and get people to take their capital into other parts of the economy. But secondly, a lot of this capital is gray or illicit capital, right? So how do you use that capital that is currently out of the formal economy and bring it into export promoting investment funds, businesses, etc., right? You have to solve for that. You cannot just wish it away as a problem that, I'm not going to deal with. But if you can think about this policy from the standpoint of like, there is a large chunk of capital that is currently in unproductive asset classes. I can tap into that and then bring it into the formal economy, but make sure it gets directed into the export side. Good things can happen. And finally, Ankur, underappreciated point in Pakistani conversations, Pakistan needs pension reforms. Some work has happened around that, but pensions as they exist unfunded are a huge problem, almost as big as the debt servicing problem in the country, both on the civil and the military side. They have to move towards contributed pension schemes. Some of that is already happening, but it has to be done at the provincial level much more aggressively. Imran Khan's PTI at the Khyber Pakhtunkhwa government level last time around, their finance minister already started that journey. I think that's a decent model to build on from the Khyber Pakhtunkhwa experience. And so that not only frees up budgetary resources in the medium term, but it also creates pension funds that can then do the long-term domestic investments in infrastructure and things that Pakistan needs without accessing long-term capital from abroad, right? So if you solve for the pension problem, not only do you have a budgetary space to do better things at the provincial and the federal level, but you have the fund flows that can then match towards the long-term investment needs of the country as well.
How can Pakistan leverage its strengths, like a young population and a strategic location, to revive its economy?
So I think for Pakistan, the biggest strength itself is the demographic dividend, which is quickly becoming a ticking time bomb. I think Pakistan needs to put and upskill its youth. A lot of the youth that is in Pakistan is underskilled and has literacy challenges to be at the very basic level. And there has to be a skills-based program that solves for that challenge. And then it's labor arbitrage, pure and simple. For Pakistan's economy to grow, it has to have an export-oriented strategy that looks at labor arbitrage and says, we have a bunch of young people who are talented, those that are not skilled, we're going to skill. And then you can do the basic value addition work that is needed for the global economy. And we're going to export our way out of this problem and then slowly climb up that ladder, right? So I think that's important. To the geostrategic one, I think I would go back to the same thing. Pakistan has to have a coastal development strategy. If you are going to export your way out of this problem, you got to have an efficient coastal system that allows your goods to be exported and basic value addition to be done. And only then can you climb up that more sophisticated ladder. But if the argument or the policy choice is that I'm not going to have a coastal strategy, I'm going to move all of the inputs, including energy, into the heartland, do the value addition there, and then move it back south to export, by then you've already lost on the arbitrage.
So that was Uzair Younus, the host of the Pakistonomy podcast, talking to us about Pakistan's economic journey and its unique challenges. For more such conversations, keep following Business Standard.